Joining me now, CNBC contributor Jimmy Pethokoukis of the American Enterprise Institute. Jimmy, thank you for joining us here this morning. It seems like Bezos' comments perhaps targeted at Google after they decided to end their deal with the U.S. over the drone videos that uses artificial intelligence and getting some of that backlash. Of course, we know that Amazon did not win the contract, that JEDI contract. I mean, what's he trying to do here? Is this a political maneuver, trying to play both sides of the argument for the U.S. government? Because we know Amazon's contesting the fact that they didn't win that big deal.
Right. Certainly, I think Amazon would like to be seen as a patriotic, sort of national champion country, a company going forward. They've had a lot of problems with the Trump administration. But I think more broadly, Bezos is making a point that if big tech overall doesn't want to be regulated, heavily regulated, because there's this new urge to regulate these companies, if they don't want to be broken up, if they want to be seen as national champions, they have to do business with the Pentagon. If they don't do that, they're going to be subject to far more cries to be regulated and broken up. It is just an untenable position for America's largest technology firms to not work with the Defense Department. I think Bezos, he's a smart guy. He realizes it, and that's what he was saying last night.
It's very interesting because we just don't often hear from Jeff Bezos. And so to hear from him in a stance that was fairly firm, at least the words that he used, I thought was quite interesting.
No, definitely. Listen, the president seems to have a problem with Jeff Bezos and Amazon, so obviously he has to be careful about what he says. But this is exactly the message he should be saying, both on behalf of Amazon and big tech overall. They have a big problem with Washington, D.C., and it's going to get a lot worse if they're viewed as somehow being, anti-American going forward.
So, I mean, it's funny that Amazon shares, of course, aren't really moving much on this, and losing that big contract with the Pentagon perhaps was less truly about the money and more about sort of the pride in winning this deal. I mean, do you think that
the money's always good?
Money is always good, but what was it, $10 billion over 10 years? So, I mean, think about all the money that Amazon has and the enterprises that it's building in both cloud and, of course, the retail side that it has going on here. So really, what is at stake here for Amazon when it comes to working with the government from a business standpoint, beyond just trying to be patriotic, doing the right thing to prevent the government perhaps maybe from digging into them as an antitrust situation?
Well, listen, big tech companies overall have a problem, with both sides of the aisle, Democrats and Republicans. Amazon, as I said, has a particular problem with Republicans. And I think in a way, sort of what's good for big tech is going to be good for Amazon if they begin to put forward an image that, listen, we're not just the people sort of invading your privacy. We're not the people where foreign governments use our platforms to interfere with elections. That we are we are what you thought we were a few years ago, the crown jewels of the economy. And if America does well, we'll do well, and if we do well, America do well. I think this is that speech last night, or those comments were really a long-term investment in our fellow Americans, seeing them as big pluses for the economy. So please, don't regulate us to death.
Well, we're going to move on to another topic here for you, Jimmy. An unprecedented trial on tap today that could test the federal government's role in deciding the future of a major corporate M&A. A coalition of 13 states and the District of Columbia, all led by Democratic attorneys general, are suing to block the $26 billion planned merger between T-Mobile and Sprint, the deal that would combine the country's third and fourth largest cellular providers. Federal antitrust officials, all appointed by President Trump, already approved the deal earlier this year. Some pretty big potential implications here, not just for this deal, but going forward. But I guess we'll start with this deal. What do you think this could potentially mean for the outcome of Sprint T-Mobile?
Yeah, well, listen, obviously this isn't a done deal, and states' attorney generals have been looking at things on antitrust very differently than what we've seen in Washington. I'm always asked, what's going to happen if Democrats take the White House and Congress with Elizabeth Warren as president? I would look very carefully at what's happening at the state level with these attorneys generals, not just with antitrust, but also issues such as privacy law, how we're going to regulate sort of the sharing economy with labor regulations. It's a much different world at the state level, and what you're seeing happening there may be a pretty good indication of what you may see, in Washington D.C. if we have a change of political control in Washington.
I mean, how closely do you think deal makers or even companies looking to potentially do some deals are watching these talks? I mean, what could be the broader implications for future M&A?
Listen, for a number of decades in this country, we've been very pro M&A. Not too many big mergers have been stopped. We haven't seen big antitrust actions. This is listen, I would look at this very closely. This is exactly the sort of thing which could indicate really a sea change in how government, starting at the state level, but then eventually at the national level, is really going to approach mergers and antitrust. I think this is a pretty big case.
And you mentioned previously Elizabeth Warren and sort of her proposals about the idea of blocking some of these big deals. There's still many players in the Democratic field. How seriously do companies need to be listening to some of these proposals, which would really change things very drastically from where we are right now?
I would look at less at the specific details of any proposal, but more directionally where it's going. And both among Democrats and listen, there's no friends here on the Republican side, where there's just a lot more skepticism of big companies. There's skepticism, whether they care about our privacy. There's skepticism about whether they're squashing innovation. So we're going to see probably more skepticism and more actions, both at the state level and I think eventually at the federal level if Democrats take power.
So I'm going to move on to this other topic with you, Jimmy. Big bets on some of the year's most high-profile private companies are proving to be big flops for investment managers, from names like WeWork to Juul, firms that manage billions in mutual funds. And 401ks, probably yours if you're watching, have faced steep losses on these investments. CNBC's Deirdre Bosa has more on these unicorn write-downs. Let's take a listen.
Increasingly, startups have been getting funding from some of the biggest mutual funds. But this year, as some of the highest flying names have flopped, institutional investors like Fidelity were left with major valuation markdowns as well. According to data from PitchBook, the top 10 mutual funds collectively held WeWork shares worth nearly $600 million in the first half of the year. Fidelity, Vanguard, and Jackson National are just some of the names that placed lofty valuations on their holdings, only to have to mark them down as much as 75% after the company's botched IPO attempt. Another unicorn flop was Juul, once valued at $38 billion in the private market. Fidelity and American funds held shares in the startup valued at nearly $1.3 billion. According to fund disclosures, that was marked down to less than $700 million after Juul's valuation was slashed. Now, ride-sharing is another area that's drawn the interest of mutual funds, both as private and public companies. T. Rowe and Fidelity put capital into several of Uber's later-stage VC rounds. Fidelity has upped its stake in Uber since it went public, and it's now the second largest institutional holder of the stock, according to FactSet. Fidelity also led Lyft's Series I round at a pre-money valuation of $14.5 billion. That company now has a market cap of $13.4 billion. Question is, do some of these high-profile markdowns make mutual funds reconsider their unicorn strategies? Back to you, Courtney.
Thank you very much, Deirdre. And that is a perfect question. So obviously, I know these companies do an awful lot of research and homework when they're trying to make their investment decisions, but they have gotten burned by some of these big high-profile names that Deirdre just went through for us, Jimmy. So what do you think? Does that largely change their investment outlook and strategy going forward?
I don't know. Listen, as long as the economy continues to generate these sort of, pretty exciting technology companies, there's going to be a huge incentive to want to participate, and that's what we're seeing. And there's also a regulatory incentive to participate. I mean, one reason these companies have been sort of staying private for so long, and these evaluations have been going up, is because of government regulation at the end of the Obama administration. And it would not surprise me if Democrats take control, there's going to be a lot more regulatory impulse there, that they may take a look at what's been going on with these unicorns, these big valuations, which overshot, and perhaps wonder whether these money managers should be investing in these companies, whether they should be allowed to stay private for so long and not be subject to public scrutiny. I can certainly see that as an area. The government will take another look at that.
It's just so interesting if you look at each of these companies, WeWork, Juul, and Uber, they each sort of have one very large identifiable problem, but it's not the same problem from company to company.
No, listen. Listen. These are still relatively young companies. We know with big ambitions. In these cases, at least in two of these cases, there's sort of a big regulatory issue where they have a problem with government. Uber. There's to pick that one. There's a problem with labor law. How should these drivers be classified as employees and contractors? So there's sort of two big government issues they have to deal with. And those sorts of issues affecting unicorns going forward. Again, if Washington decides it wants to regulate more heavily, you're going to see a lot more of that.
Not to mention that safety report that Uber put out that was pretty shocking.
Yeah, that
numbers.
was noticed in Washington. People noticed that safety report.
I don't know how you couldn't notice it, whether you're a regulator or a rider, for goodness sakes. That was pretty eye-opening. Jimmy Pethokoukis, thank you for being here with us. You know we're going to have you back sometime soon.